All right, good, good. This is being recorded for your listening pleasure, everybody. My name is Fausto Puglisi, and welcome on Closing Bell. We do this every Tuesday at 4:30 Eastern Standard Time. Today's topic is going to be how to risk $158 to make potentially $1,000. And with my old, good, very good friend, Hubert Centers. Hubert Centers, known for a very, very long time. I got to thank Hubert. I never had a chance to get him on the phone, but Hubert was so generous and knows how important technology is that he even sent me an iPad. So maybe I had to really thank him. It's probably the only time I probably got able to say thank you. I did send to his staff, but I was really generous of him in a way of him realizing that, it's very important to have great technology when you're trading, and what you work on is how well you're going to trade. So, but he's going to be talking for us for about the next hour. And like I said, he's been very, very well known. You could just shop around and do your background check on him. He's got some great videos on YouTube, and his Twitter feed is just unbelievable. We've got a great following. I've watched him. I traded with him. I've seen what he's done. I met him many times and seen him done speaking. One of the very few people I would sit and watch in a live presentation is Hubert Centers. So if he's worth it to me to sit down and watch and learn from, then he's definitely worth you guys to come here and stick around listening, because I know I'm going to learn a lot. That's why I love doing these events. I love having great speakers coming on, and Hubert's one of my favorites. So we're glad to have him back again. So for everyone here, without further ado, I don't want to take too much time from Hubert. Sit back and enjoy the show, everybody. And Hubert, stage is all yours.
So I have no idea how to work this thing. Sometimes every little piece of technology is a little bit different. So I'm going to make sure I'm using it right here. My desktop monitor 6. So I'm looking at the chat. So if you guys could tell me if you can see the chat, that would help me out a little bit. I usually don't use this one, so it's not that. Okay, cool. So can you hear audio? If you can hear audio, just give me A for audio. Yes, that's good. All right. And then if you can also see desktop, just hit D for desktop, and that means I know what I'm doing. Just every little webinar software has its own little. All right, so we're good to go. All right. So now I'm going to throw up a PowerPoint slide. Now you should see a slide that says how to risk only $156.25 to potentially make $2,125. Do you see that slide? And then the last thing I got to test is I just got to make sure that my ink is working. And just answer this question. I know I'm making you do a lot of stuff, but it'll be worth it. What is the answer to this question right here? And that'll make sure that my ink is working. Let me see if we make sure. Okay, all right, cool. Looks like we're good to go. All right, cool. Now, I usually do this webinar presentation and say how to risk only $156 to potentially make $1,000, but I'm doing some experiments. And so right now on this trade, I was up earlier today, $2,125, and only took a risk of $156. So let's get started on that. So first and foremost, everyone has to listen to a really scary warning disclaimer. Warning, past performance is not indicative of future returns. You may not be able to do what I do. It's a weird thing. There's not a lot of us that can do this for a living, and there's not a lot of us that can do this part-time. So the only guarantee that I can make you is you're probably not going to make a dime trading, and you're probably going to lose a lot of money. So I'm a registered Series 3 and a Series 30, and the NFA and the CFTC are strict on those rules, and I actually have a soul. So I enjoy helping people, but I am not delusional. I know that not everybody can do this. So Rule 40 or 4.41, hypothetical simulated performance. What I'm doing here is I'm teaching you theory with the PowerPoints, right? So I'm picking some very good examples, some perfect examples that worked out for me. They don't all work out like this, but I have to teach a perfect example so I can say, okay, here's the theory, and then here's how you actually do it. So I'll show you theory, then I'll actually show you some trades that I actually did and how they worked out. So I think that's a fair way to do it. So heads up, warning, trading can be hazardous to your wealth if you don't know what you're doing. It can be hazardous to your wealth if you do know what you're doing. Trading will probably end up being like a country song. Your wife and kids are going to hate you. They're going to repossess your home, your truck, and your dog. All right. So after you've heard that disclaimer, you're sitting there going, "Oh dear Lord, Fausto, why did you bring in the hillbilly from Kentucky in the office trading?" I don't want to scare you off. I just need to tell you the truth about like how it's ran. Like what we do is not typical. The average typical person usually loses more money than he makes. So, like Fausto said, my name is Hubert Center. This is my no BS approach to trading and investing. If you like someone that's going to talk like, well, the first thing you want to do is look for the 1-to-1 ratio of the divergence of the hypothetical, I'm probably not your guy, right? I am known as a straight shooter in the business just because I call them how I see them. Now, am I always right? Lord, no. I'm usually wrong way more than I am right. But my risk is so small and my gain is so large that it usually turns out in my favor. So we're going to have fun on this webinar. It's a little bit different. I'm going to talk to you as if we are two high school or college friends and we're at a bar having a beer. Is everybody cool with that? That way I don't have to worry about using proper English. And I'll tell you one thing, one of my PowerPoints, I know they've got spelling errors. So I'm just going to show you, we're just going to be like we're friends from the past, and you're asking me like, hey, how do you trade? How do you do that thing? How's that work? All right. So that's what we're going to do. So I now disclaim the heck out of you. Hopefully I've scared a few of you off, because this is not a get-rich-quick scheme. And anybody that tells me, like, hey, I just need to make some money real quick in the market, and I'm like, well, dear God, well, don't trade then, because there's nothing quick about it. It takes years or decades to learn how to do this. My personal belief is if you get around other super driven, successful, wealthy, and smart people, some of it will rub off on you. Not all of it, but some of it will. You're still going to have to work your ass off in order to get where you need to go, right? And you know that to be true. It's going to have to be blood, sweat, and tears, and you're just going to have to work it off, right? That's just how it works. If you think you're going to place a trade and everything, you're going to take a $5,000 account and turn it into $2 million, the odds are highly against that. Now, I have friends that have done that before. Okay, you can do it. It's just the odds are totally stacked up against you. This is just a collage photo of some of my acquaintances, friends. Some of them I advise in their business. Some of them I actually help them in their businesses, and some of them I just give to their charities. And I've met them at charity functions and had dinner with them or drink with them. So they're all good people. Congratulations, you're in the right place at the right time, and here's why. Let's do some quick math. All right. Now, heads up, in high school and in college, I got C's and D's, not B as in boy, D as in dog. So let's take a look at some quick math. Now, if I told you that I was going to show you a trade that worked 40% of the time, would you be willing to do it? If I told you I was going to show you a trade that worked 40% of the time, would you be interested in learning about that trade setup? Yes or no? Pretty simple question, right? Some are saying yes, yes, yes. Obviously, a few of you have seen this presentation before. Answer is depends. Depends on the risk. No. So Charles says no. Depends. Yes, if profitable. So let's go through the math. So what we're talking about is we're going to talk about when our risk to reward ratio is going to be like this. So we're going to say that we're going to do a series of 10 trades. And our first 6 trades are all losers. So we had 1, 2, 3, 4, 5, 6. 6 losers in a row for minus $156 of risk. That means we're going to lose $937 or $36. I'm sorry. And then we're going to have 4 winning trades that are profitable, and we're going to hold them for a $1,000 profit, which we're going to make 4,000. And then when you do the magic math here, you just go 4,000 minus 936 equals $3,064. Now, if I was going to show you a trade that worked 40% of the time and gave you this, would you now be interested in learning how that trade setup works? It's a very simple trade to do. If you can count on both hands, you can do this trade, I promise you. It's very simple. It'll probably blow your mind away of how simple it is. You'll be like, there's no way that works like that. But I'll prove you wrong. I will prove you wrong. So let's go and let's say it's worth. Let's say, what if there's a trade setup that only worked 30% of the time? Would you be willing to do it? Now, I do a lot of webinars for a lot of different reasons. I'm a businessman, I'm a trader and educator, and so I do different webinars for different reasons. But if you do the math, what would the math look like if you only did a 30% risk-reward ratio? Would you be willing to do it? So really quick in your head, a lot of people ask you on a webinar, it's like, hey, what's the percentage win rate of that? What is the percentage winner of that? And I'll be like, oh, I can teach you a trade that works 98% of the time. Anybody want to know what that is? It makes money 98% of the time. Here's how it works. You're going to go long you're going to go long the S&P or the ES. You're going to use no stop, and you're going to use a 1-tick target. Now that bad boy right there works 98% of the time. It's those 2 times that it doesn't work with you and no stop that you're absolutely going to get annihilated. So when you look at what's going on with the risk to reward, if you're going to do a series of 10 trades, okay, and let's say on one trade you're going to risk $100, and then on the other trade you're going to make $1,000, what's your ratio got to be like? So you only got to do, let's see, you could lose 9 here and 1 win, and it would come out break even, right? Now, if you had, 8 losses here and you only had 2 winners, you would be profitable, right? If you did 7 losers and 3 winners, you'd be making some decent cash. If you did, 6 losers and you only had 4 winners, you'd be making some really good cash. So I'm going to erase the ink here, and let's go through here and erase the ink one more time. So let's say this deal is worse than that. So 7 losing trades times 156 is going to give you 1,092 of losses. 3 winning trades at $1,000 is 3,000, and what's going to happen here is you're going to go 3,000 minus 1,908 is going to give you, 1,092 is going to give you your 1,908. So not a bad trade setup that only works 30% of the time. I don't know about you, but here's the deal. I'm wrong more than I am right. I'm not 50% accurate. I wish I was, but I'm just not. Some of the best traders in the world are not 50% accurate. If I can get to anywhere from 38 to 52% accurate, boy, I'm as happy as a pig in slop, right? This assumes that all winners go to 1,000. Chances are they may have to bail early on that. Maybe, yeah. If you wuss out of the trade and you jump out early, yes, that would be the rationale behind it. So there's 5 stages or 5 levels. Stages kind of sounds weird. Let's go levels. Levels of trading. Number 1, you learn how to lose massive amounts of money. Anybody in here been through this stage where you just lose, and you just get really, really effective at burning cash? Yeah, it sucks, right? And you're just like, wow, this is painful. Why did I sign up for this business? And then you go to level 2, and you go, okay, now I'm getting decent at losing little bits of money. I'm understanding how to control this burn rate. So now it's just a trickle instead of a full-blown flow. And then what happens is you finally get something that resembles a plan. You start using stops, and you get stuck at treading water stage, where what happens is you make a lot of money, and then you lose a lot of money. Make a lot of money, lose a lot of money, make a lot of money, lose, and give a lot of it back. This trade is designed to take you from a stage 3 trader to a stage 4 trader where you can start making some consistent cash flow. Now, making a killing, that's different from everybody. Like I said, I'm registered. I can't be making claims that you're going to make a killing. But, it's a way to represent, like, after you make a consistent cash flow, then you get some more skills, and then you'll start really coming into your own as a professional trader. So there's several things that you can do to move from stage 3 to stage 4. Number 1, always use a stop. Number 2, you want to make sure that you're risking a very small amount of cash to make a larger pile of cash. Number 3, you got to have a plan, and you got to stick to it, okay? You got to. If you start bailing out on a plan, and when the bullets start flying or when somebody busts you in the nose, if you just totally wuss out on the trade, that's your fault because you're not sticking to your plan. So you do have to have a plan that you can follow consistently. We'll talk about that in just a little bit. So those are some things you can do. So there's 3 main styles that traders go through, and this is the first style. A lot of people, what they'll do is they'll have a huge loss, and then as soon as you have that huge loss, they'll be up $300, and they'll go, cha-ching, ring the register. Oh, I'm up $200. Cha-ching, little gain, and then huge loss. So what happens is they have the residual memory of this massive loss, and they're like, oh my God, I've got to take the winner. I've got to take this profit really, really quick, because if I don't, I'm going to get smoked again. And what happens is they have a huge loss, little winner, and then another massive loss. And then C is they have massive losses, and then they also have little losses, and they die the death of 1,000 cuts. A lot of people do that. Now, here's how I try to trade every day. Now, does it work every time? No, it does not. I'm not here to blow smoke up here and say it works all the time. It does not work all the time, but it's what I go for. What I go for is little loss, and I have a bunch of little losses. No joke about it. I have a lot of. And then, boom, I get a good trade, and I let it run for a long time. Boom, I take my profit. And then I have another series of a bunch of little losses. And, sometimes they get as deep as 50%, and then, boom, I have another big winner. So this is how I always try to trade. So there's a couple of things that are going on here. Number one, the trade that I'm going to show you, it requires for you to ride your winners longer. Okay. It also has a very low risk, high reward payout. In other words, we're going to be risking very small amount to make a larger amount. So let's do an analogy real quick. This is called Aesop's fable. This is a scorpion, if you can't see it, and this is a frog. So the frog is on an island with a scorpion. The scorpion propositions the frog and says, "Hey, frog, give me a ride on your back to this other island over here. There's better hunting grounds there, and just give me a ride over there." And the frog goes, "Well, you've lost your mind. You're going to kill me and eat me, and I will die." And then the scorpion goes, "No, no, no. There's nothing else here to eat but you. If I eat you, then I'm going to starve. Over here, there's more stuff that I can kill and eat." And the frog goes, "Okay, that makes sense." The scorpion jumps on the frog's back, and about halfway there, right here, the scorpion stings the frog in the back, and they both sink to their death. As the frog looks at the scorpion and goes, "Why? Why would you do that?" Now, the reason I tell you Aesop's fable is to tell you this. If you're trading stocks, options, futures, forex, bonds, gold, whatever you're trading, and if it trades like this, run, stop, reverse, run, stop, reverse, run, stop, reverse, run, stop, reverse, heads up, I'm breaking out, oh, got you, sucker, run, stop, reverse, run, stop, reverse. If you're trading this instrument, which is a sprinter, and you're trying to do a breakout strategy with it, heads up, you're the frog and the market is the scorpion. I'm not saying you're getting what you deserve. What I'm saying is you are trying to trust a market that is telling you that it is evil. It's a sprinter. It's not going to do anything good for you. The nature of that market is to sting you. So if you're trading the market that's run, stop, reverse, run, stop, reverse, run, stop, reverse, and you're always getting chewed up and stopped out and spit out, then trade something else. And this is a really good analogy for the ES, the NASDAQ, the Russell, and the YN. They all index futures trade like that. Now, today they had a nice trend to the downside and then the upside. Now, let's take a couple other different markets. So let's say that those are the sprinters, A, okay? Let's take the market over here that's a B market that goes like this. And there's a couple markets that are easier to trade, in my opinion. That goes up and then pulls back, up and then pulls back, up, then pulls back, and then goes up, and then it'll do its adjustment. So this would be B, and this would be like the bond market right here. And if you've never traded bonds, don't worry, I'll show you how in just a second. And then there's also the gold market. Gold is a very good market. It goes like this. It goes run, break away, consolidate, run, consolidate, run, consolidate, run, and then retrace. So which one would you rather trade? Would you rather trade A, B, or C? It really just depends on your trading style, right? So you've got to match up your style to the market style. So A would be index futures, B would be bonds, and C would be like gold. If you've never traded any of those, you don't know the personality of that market. So let's go through like, what's the best way for you to find the best market for you to trade? So just out of curiosity, what do you trade in here? Do you trade stocks, options, futures, forex, bonds, gold? For me, I'm a trader's trader. I trade everything. If it moves, I trade. If there was a market in Tic Tacs or toothpicks and I thought I could make money in it, well, I would do it. So what we're going to do is we're going to go under, we're going to take another little story detour here. If you were going to trade and you did an informal survey, your broker, depending on where you start, let's say that they were all trying to talk you into trading the S&P E-minis. They'd say, oh, you should trade the S&P E-minis. It's because they have the most volume. Everyone trades them, and you're like, oh, okay, that makes sense. Yeah, that makes sense. I want to be where everybody else is. Yeah. And then what happens is you trade them, and then you get chopped up, and then you start to ask yourself some really quality questions like, why can't I do this? I'm smart. I'm successful. I'm obviously sexy, but this is just too dang hard to do. Why can't I do it? I know what it is. It's rigged. Interesting question and also interesting answer. It's not so much that it's rigged, it's that you're trading a sprinter market that goes run, stop, reverse, run, stop, reverse, run, stop, reverse. You're trading it with the wrong strategy or tactic. Doing the right thing at the wrong time will not work. So then what you do is you start going, what is the daggone best market to trade? And there is no best market for everybody to trade. Everybody's a little bit different. So the bad thing is that you've been betrayed. And you're sitting there going, I knew it. I knew someone tried to screw me over. Who was it? And it's not your fault. You've been lied to. And you're probably asking yourself, who did it? Well, they are, other traders, the media, CNBC, Bloomberg, other investors, and it gets passed down from generation to generation to generation. Did you test what would be the best market for you to trade with your trading personality and style? And I would say that most of you did not, because I know I didn't in the beginning. I was lucky enough to find a guy that mentored me for, a couple of years, showed me how to trade, and then I just broke out on my own, and then I started learning how other markets trade. So did you trust it, or did you just believe what was going on? So trust but verify is what I try to live by. You can trust anything that anybody says, but you want to verify it. So you can trust what I'm telling you here on this webinar to be true, but I definitely recommend that you verify it, you back test it, you front test it, you crunch the numbers and go, okay, that hit from Kentucky was kind of funny, but I don't think he knows what he's talking about. Then just verify what I tell you. Say, okay, well, looks like it works. Well, it didn't work today. And just do the math for yourself. All right. So true or false, if you can trade, do you believe you can trade any market? True or false? If you can trade any market. You believe that to be true? Well, I would say that's probably true, but, and there's always a big but, right? It's kind of like when your girlfriend or your boyfriend broke up with you in high school, like, no, it's not you, it's me, right? Or when the butt worm comes out, you always come out like, uh-oh, when's the other shoe going to drop? I would say it's true, but it's a lot easier to trade something that matches your trading style and personality. And you know this to be true. You know that there's sometimes where you just get in a groove and you're just in sync with the market. And it just feels good. It sounds right. It feels good. Sometimes it can even taste good, right? Depending on if you're making or losing money. So if you're a decent trader, you should be able to trade just about anything. But there's always going to be one or two markets that just syncs up with you and just dovetails really good with your personality. So let's talk about how to do that. So if you do not match your trading style to the right market, it's going to be very, very painful and very, very frustrating. It's kind of like putting a square peg in a round hole. It just won't work. Trading the wrong market or the wrong style for you is like hitting yourself in the head with a hammer. It's going to feel great once you stop. Now, if you're getting stopped out and you're trading a sprinter, run, stop, reverse, heads up, if you stop hitting yourself in the head with that hammer, you can physically think about stuff. All right, so think about this statement. What's wrong with trading better quicker? Is there anything wrong with you trading better quicker? Now, this is not a get-rich-quick scheme. I'm not telling you I'm going to be able to teach you all the tricks of the trade, and I'm going to make you profitable in this 60-minute webinar. I just can't do it, right? But what I can do is I can give you some tips and tricks that will shorten your learning curve, and you may be able to make money a little bit quicker and a little bit smarter. So that's what I'm going to spend the rest of the webinar doing. So first, I have to sell you on a decent way of how to pick a better market for you to trade. I really could care less what you trade. If you like trading butter, it trades 30 minutes on the exchange on Wednesdays. Trade that. If you make money on it, awesome. If you trade doing calendar spreads, that's great too. I don't care. If you trade it doing forex pairs, wonderful. Trade it more. If you trade it day trading, scalping stocks using level 2 and level 3, awesome. Do more of it. So one of the best ways, in my opinion, to pick a market to trade is to look at the average true range, okay? And the average true range, ATR, let's do an analogy like this. Let's pretend that you're interested in taking pilot's license, and you've been taking pilot's license for 3 days, and you're taking them at a local airport, and the guy to the right of you is teaching you how to take off and land and do some really cool stuff, and all of a sudden he dies of a massive heart attack, and you're talking to the pilot going, hey, my cat just died. My pilot just died, and I've only been up here for 3 days. I don't know what's going on. Would you prefer to land on a landing strip that's this big and this wide, and then we're going to call this runway A, or would you prefer to try to land on a landing strip on the tarmac of B? Which one would you rather land at, right? Obviously, you want the biggest, widest field known to man. And you're like, look, clear out everybody. I don't know how to do this. I'm scared, I'm about to cry, clear it out, right? Now, flying and trading have a lot of similarities. In flying, you have, you know, optional takeoffs, but mandatory landings, right? Like takeoffs are optional, but landing's kind of mandatory, right? Same type of trading. Well, placing a trade is kind of optional, but getting out of it is kind of mandatory, right? You're eventually going to have to get on those trades. So a wide ATR would be, all right, if something's trading here at A and then it goes to a high here at B, that would be your average true range. That's how wide that market is. Now, what we're going to do is we're going to look at a daily chart and we're going to look at a 14-period ATR. So all that means is it's going to look back 14 days. It's going to average out the highs and the lows of all those days, and it's going to divide it by 14. If you're going to do a 5-minute chart, it's going to take 14 minutes. It's going to take 14 bars, 14 5-minute bars. It's going to add them up and divide them all by 5. Does everybody understand the theory of an average true range? So in the first 4 here on the indexes, this one, 1, 2, 3, and 4, these are index futures, okay? And here's how these things trade. So we'll make a squiggly line here. So the range for the Dow is 93 points. Its multiplier, how much a minimum move is worth $5. And then you can see, or what a point's worth, I'm sorry. So we're going to be able to make or lose $465. Now, does anybody believe that you're going to be able to get the dead high and the dead low and the dead high of this market? Are you going to be able to pull all 93 points out of the market? Yeah, right. If you've been trading for more than 2 days, you know that's damn near impossible, right? If you can get half the range, you'll be doing great, right? So just remember that when you're doing these calculations. Now, on the S&P, it's going to move about 10 points. It's $50 a point. You're going to make or lose $515. NASDAQ moves 25 points. Not today. NASDAQ went crazy, right? It's going to make or lose you $20. So you're going to make or lose $518. Russell, about 10 points times 100, about $1,000, right? Plus or minus. Now, the thing about these things are actually good trading instruments if you're a counter trend trader. If you're a counter trend trader. The reason I say that is because these are sprinters. 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 All of these markets right here, all 4 of these go like this. Run, stop, reverse, 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 run, stop, reverse. They all do this type of thing. They're really choppy and sloppy. They're not that easy to trade if you don't know that they're counter trend trading instruments. So, now for me today, trading the Dow, just trading a very small amount, a small account, I was able to pull $500 out of the market. But I know that it's a counter trend trade. So what I did is when the market gapped up this morning, I let it sell off a little bit, and then as soon as it bounced up again, I shorted it. And then I covered, and then I wrote it down to the downside. That was just one little trade, doing counter trend trades in the minis. I've been trading minis for years, so I know how to trade them. Now let's take a look at the bond market. In the bond market here, they move a little over a point. They move a little over a point. It's $1,000 a point, so you're going to make or lose $1,150. Now, the cool thing about bonds is they trade like this. They go up and retrace, up and retrace, up and retrace, and then up, and then they'll do their adjustment, okay? Now, heads up, they're boring to trade. I'm not going to lie to you. They're boring. They'll put you to sleep. They're mesmerizing you. But like, oh, my God, it's like watching paint grow. Or like watching grass. It's like watching paint dry or grass grow. So they're really good traders, but they're very methodical, okay? And I'm going to show you how to trade those. Crude oil is bipolar. Anybody have a crazy ex-boyfriend or crazy ex-girlfriend or an ex-husband or ex-wife? That's what crude is. Crude oil's crazy. It's bipolar. Leave it alone. Trade it last. Also, silver's a little bit crazy because the contract specs is $5,000 a point. It's a little bit wicked. We call it the widow maker along with natural gas. So you want to stay away from crude oil, natty gas, and silver. Now, compared to gold, gold's actually halfway calm compared to these 2 nut jobs here, okay? Now, gold will go like this. It'll break away, consolidate, break away, consolidate, break away, and consolidate, then it'll adjust. So in my opinion, if you're a new trader, I would start down on either the bonds or gold because they're really good to trend traders that either like to buy pullbacks or trend traders that like to buy breakouts. So we're going to spend the rest of the time, I'm going to try to sell you on trading the bond market. Now, don't freak out on me. Don't leave. bonds are a cool instrument to trade. And I don't mean that we're not talking about CDs that your grandma and grandpa traded, like, oh, I got a CD at 6% interest. We're not talking about that. We're talking about the 30-year bond. So there's the 30-year bond, there's the 10-year note, there's the 5-year note, and then there's the 2-year note. Now, this one by far is the thickest. I trade this one the most because I like how it moves and it's got a bigger tick back. So anybody in here own a home? Anyone have any interest on your home, a mortgage, right? So does anybody think that interest rates are going to stay down here forever, or do you think they're eventually going to climb over time? Right, you're right. Interest rates can't stay here forever. They will eventually climb. Now, I'm not saying they're going to climb tomorrow or next week or next month. I'm just saying that if you know the interest rate on your home is probably going to go up, then the bond market will probably go down. So fundamentally, you don't have to really know much about the bond market other than you're trading the inverse of the yield curve. And it freaks some people out. Go up, but just not soon, right? Yeah. So if the interest rates go lower, then the bond market goes higher. If your interest rate on your home goes up, then the market usually goes lower. So they're pretty easy to trade. So let's talk about holding a winner for a longer period of time. So I'm going to pretend that you know nothing about the bond market, and I'm going to give you a crash course in bonds, okay? So let's go through the months, the time, cautionary points, symbols, tick values, dome, margins, and I'll teach you one trade, okay? All right, so I'm going to pretend that you know nothing about futures or the bond market. So write down all of these symbols, because if you don't, you'll lose billions of dollars. No, I'm just joking. It's really, the most confusing part is what I'm going to go over next. So just take you a piece of paper down really quickly. I'm going to show you how the bond market works real quick, and the futures market in general. So if you've never traded futures, don't worry about it. Now, number one, if you've traded a stock or an option ever in your life, what is the one thing that keeps you up at night? If you either trade stocks overnight or options overnight, what is the thing that keeps you up at night? What's the number one thing that you worry about? Gaps, right? Yeah, you're sitting there going, yeah, gaps. You have the gap risk, right? You're like, please, dear God, I am long Google. Would you please make sure that both CEOs are alive and that the earnings are good, right? So if you trade stocks or options and you don't have a futures account, go get you a futures account. Go get you like a $3,000 to a $5,000 futures account, because what you can do is you can hedge your risk in those gaps. Let's say that what you could do is, let's say you're long Google, okay? And Google, you thought it was going to go up, and you placed a long stock trade or a long options trade, and then all of a sudden, both cats that invented Google were on a plane and they got killed. Well, Google is probably going to get down 200 points, and you're going to lose a lot of money. What you could do is you could just short an NQ futures, 1, 2, 3, 4 futures, whatever number you want to do. And as the NASDAQ's going down, you'll be making money on this trade while you're losing money on the Google trade. Does that make sense? So it makes a really good hedge. And plus, most futures markets are open 23 hours a day, so you don't have to worry about those weird little gaps, okay? Because they trade almost 23, some of them 24 hours a day. So that's why you want to trade a small futures account, so you can always hedge against that crazy stuff, okay? So let's go into the mechanics of a futures market real quick. So number one, they trade in months. So if you've traded options in futures, whether it's the Dow, the S&P, the NASDAQ, or the Russell, there's months that we can trade. So here's how it works. In 2013, it would be it would be like this. It would be US Z13. That means the symbol, the month, and then the year. So this is the symbol, month, and year. All that means is this is the 30-year. Now, the 30-year has two different symbols, US or ZB. It depends on your platform on which one you're looking at. The Z just means December, and the year means 13. Now, we're going to trade that thing until the second week, on the Tuesday of the second week, and then we're going to stop trading December, and then we're going to start trading March, which is going to be US H14. The second Tuesday of the, or I should say the Tuesday of the second week, so the second week of the month on Tuesday, we're going to stop trading March, and we're all going to start trading June, which will be US M14. On the second week on that Tuesday, we're going to stop trading June, and then we're all going to go to September, which is going to be US U14. Does that make sense? So what month right now should we all be trading in the bond market? So we're past March. Are we past the second week of March? Yeah, we're past the second week of March. All right, so you're going to be trading M, right? So you're going to be trading US M14. So that's all you need to know. If you have any questions, call your broker. They'll walk you through the basics. All right, so now let's move into the tick values. So they're open. Number one, the 30-year bond opens at 6 p.m. and closes at 5 p.m. The pit opens at 8:20 a.m. and closes at 3 p.m. That is the time that they open and close. This is a cheat sheet that I use. This is the 30-year bond. You can see they're very thick. 400,000, 1.4 million, 750,000, 200,000. They trade in fractions, which freak out a lot of people, but it's really not hard. I'm going to show you. Opens up at 6, closes at 5, it's worth $1,000 a point. They trade in 0.0313 increments. You're going, oh God, what is that? It's a fraction. Every tick you're going to make or lose $31.25. So cautionary times, you have to be aware of interest rates and any other major economic news releases. I use Econo-Day for that. If there is a red star or a yellow star, I know that it merits extra market attention. And let's move on to the next one, tick value. On the 30-year bond, one tick is going to make or lose you $31.25. This is how they work, okay? This is how they work. They will go 145 and 1/32, 145 and 2/32, 145 and 3/32. If we go from 145 and 1/32 to 145 and 2/32, that's considered one tick, and that tick is worth $31.25. All right. Now the 10-year, the 5-year, and the 2-year are different. They're 15, 781, and 15. I don't have enough time to teach you all those. All right. Like I said, there's different symbols depending on who you use for TradeStation. They use US, and for infinity and cost, they use ZD. Let's take a look at one more thing, and then I'm going to teach you how to trade these bad boys. I need to go to, okay, all right. Yep, I'm right. All right. All right, now pay attention to the screen because this is the most important screen in the presentation if you've never traded these before. If I've never traded a market, I use my cheat sheet that tells me what the tick values is, where they open and close, and when they settle, okay? So we're going to pretend that you're long. You got long at 135. Does everybody see where I'm circling 135? We're going to say that you got long at 135. The market is actually trading right now at this yellow mark at 135 and 7/32. If you go from 135 to 135 and 1/32, how many ticks is that? How many ticks? It's 1, right? Okay, if you go from 135 and it goes to 135 and 2/32, how many ticks is that? That's 2, right? 1 tick is how much money? If you go from 135 to 135 and 1/32, how much money did you make? Right, over here, $31.25. So you went from 135 all the way to 135 and 7/32, which is 7 ticks times $31.25 is the current price. How much money did you make if you're long? So 7 times $31.25 is $218.75, right? All right. Now, let's pretend. So first off, bonds move about 1.15 points a day. All right. And it's actually not that hard to get that. Let's pretend you got long at 135 and you stayed long all the way until you went 135 and 30/32, 31/32, and 135 and 32/32 would be considered 136. That's 1 full point. How much money do you make if you make a full point in bonds? $1,000, right? An even grand. How many ticks is that? 32, right? That's right. That's right. 32 ticks, and you'd make $1,000. All right, cool. You guys are now officially bond trading experts. That's really all you need to know. Now, different platforms will display the same information a little bit different. So 131 and 30 seconds, 132, 131, or 132 and 130 seconds. It's going to place it in fractions, okay? Now, this other platform over here will display the same type of information as 133.12. This means 12 30 seconds. 133 and 13 30 seconds. 133 and 14 30 seconds. Now, I know the round numbers are different, but they should be the same, right? I'm just showing you that some people will give you decimals, some will give you fractions. All right, so you should get one aha from here, and now we're going to dig right into the meat of the presentation right after this slide. Margins, intraday and overnight. Now, remember, the bond market closes at where? It closes at 5 p.m., and it opens back up at 6 p.m., okay? So I'm going to give you a little cheat sheet here. All right, intraday, call your broker. Most brokers will give you anywhere from $300 to $500 intraday margin to trade these bad boys. Overnight, it's going to be a little bit costlier. They've changed these since this slide has been made. This is about $3,000. This is about $1,200. This is about $700, and I think this is still about $300. So if you enter a trade at 9:30 at night, or at 9:30 a.m. East Coast time, and you liquidate it at 4:50 p.m., is that considered intraday or overnight margin? This is when they open. This is when they close. That's going to be considered intraday margin, right? Ting. Now, if you enter a trade at 9:30 a.m. and you hold it until 5:10, well, first off, you won't be able to get out of it because it's closed from 5 to 6. So that hour, that bond market is closed. But let's say you did do that. Would that be intraday or overnight? That's overnight. So instead of you paying a little down payment of $300 to $500, you're going to have at least $3,000 in your account. Now, let's say you entered a trade at 6:01 p.m. and you held it till the next day at 4:59 p.m. Is that intraday or overnight? Intraday or overnight. On most brokerages, it's going to be intraday. Now, you should be going, oh my God, that's great. That means I can stay in that trade for 23 hours and I only have to pay intraday margin. That's amazing. That's right. On most brokerage firms, you can't. Not all, but most. Now, if you entered a trade at 6 p.m., 6:01 p.m., and you held it until 5:01 p.m., that's considered an overnight margin. So the best time to place this trade if you want to take advantage of a small account would be after 6 p.m. It works intraday too. I'm just showing you a better way to hold on to it so you can get more juice out of the fruit, right? All right, let's go through the rules. Here are the rules for there's an 8-tick reversal, there's a 12-tick reversal, and then there's a 16-tick reversal. For me, I almost never do the 12. Although a lot of people will do it, I just don't. It's just not my thing. I don't like it. It's hard for me to make money on the 12, so I don't use it. So here's how the bond market moves. It'll go up, and then it'll retrace exactly 8 ticks, and then it'll continue on its way. And then it'll retrace 8 ticks exactly and head on its way. And do it again, and then it'll adjust. Okay? Now, it doesn't do it every single time. Okay? So there's different ratios. It's either going to pull back 8 ticks, it's going to pull back 12 ticks, or it's going to pull back 16 ticks as it continues on its merry way. So here's the rule of thumb that I use. Number one, I only do the 8 tick and the 16 tick. I never do the 12, hardly ever. So if in the period of a day, if the bond market has moved 16 ticks or less, I'll do an 8-tick retracement trade. If the bond market has moved 24 ticks or greater, then I want to do a 16-tick reversal. Does that make sense? Like the range that is established throughout its day. Any questions so far? Really, this is how simple this trade actually is. So what we're going to do is we are first going to figure out the range, and as it's going up and we start seeing it roll over, if we've got it in a valid uptrend, we're going to mark that high. We're going to place an 8-tick pullback trade. We're going to enter here. We're going to use a 5-tick stop loss and at least a 32-tick target. So we're going to risk $156 to potentially make at least $1,000, and we're going to hope it continues on upwards. So here's the rules of the trade. All you got to do is write those down, and then that's a secret to life, and just take really good notes, and that's how it works. Everybody got the trade? So let's walk through a couple of examples, because I hate text and reading from a slide. I think it's kind of crazy. Does anybody know what this is when you short something here and you cover it here? What's that called in trading? Other than painful, what else is it called? You may know what that's called? Yeah, I shorted it here, but then I covered it higher. What's that called? It's called a loss, right? That's a loser. That means I lost money. I call it a deposit, and I deposited $156.25 into the market. Now, I'm looking forward to getting back that money with some crazy interest later, either today, tomorrow, or next week. I don't know what's going to happen, but it's going to happen. Now, I short another time right here, and I cover right here. What's that? That's called strike two, and I donate or deposit another $156.25 into the market. And now at this point, you're probably going, man, you suck. Right? Now, when we first started this presentation, how many times did we say this thing was right? And how many times did we say it was wrong? We said, on a good day, it's going to be right 4 out of 10 times, right? On a bad day, it's probably going to be right 3 out of 10 times. So it got me twice, and I was like, okay, Bonds, you got me. I had you pegged as going lower today. Obviously, you are right, and I am wrong. I can understand that. I'm wrong on something every day, my wife tells me. So I'm going to wait until 6 p.m. when you open up again, and I'm going to try to see if I can't skin you again. The bond market immediately goes up, then it sells off. There's the low. I'll let it bounce up 8 ticks right there. I short it with a 5-tick stop loss and a 32-tick target. Now, what happens when you short something here and cover it here? What's that called? It's a gain, right? It's a profitable trade. So on this trade, we ended up making $1,000. Now, let's do the math. We're just going to say 156 plus 156, 156 plus 156, that's $312. And then over here, there's 1,000. Let's just round it to 300, okay? So we're going to make about $700 on those string of trades. Not too bad, right? I know what you're saying. You're saying, yeah, you got lucky there. Nope. Look how many times that this thing did an 8-tick retracement. Here's an 8-tick retracement. Here's an 8-tick retracement. This one you'd have to count. I'm not sure if that one would actually qualify. Here's an 8-tick retracement, but you would have lost money because it would have went 8 ticks and never gave you a profit before it stopped you out. Now, one of the main reasons that this trade works so well is not because I'm such a great trader. I'm a pretty good trader. I'm better than most, not as good as others, right? I can hold my own. If somebody says, hey, do you want to trade against me? Sure, whatever, let's do it, right? I'm better than some and not as good as others. So I'm a decent trader. I don't have self-confidence issues. I just know that you're usually competing against yourself as opposed to somebody else. So the reason this trade works so much is because I'm short right here, and then I didn't cover it until right here because of my plan. Now, why didn't I cover it in this swath of time? Does anybody know why I didn't cover from 2100 hours until 9:30? Number one, because I'm in bed, and I can't wuss out of the trade when I'm up $300 on it like a little girl right here because I'm in bed. I can't go, oh my God, you're up 300, get out of the trade. Nope, sorry, I'm asleep. I also couldn't jump out of it when I'm up about 800 right here because at 3:30 in the morning, I'm snuggled up right next to my wife, just sleeping like a little baby. And then when I wake up in the morning, I'll trail the stop down to a 2-to-1 risk ratio, and I'll continue to let it hit my target. So let's go through the example one more time. So we're going to do an example, and what we're going to do is we're going to first, you have to figure out what the daily trend is. If you don't know what the daily trend is, don't do the trade. If it's in an uptrend, we're going to go long. If it's in a downtrend, we're only going to go short. And then what we're going to do is we're going to find our 8-tick or our 16-tick reversal. You can do a 12 if you want. I don't recommend it. And at point 4, we're going to place our trade. We're going to risk 5 to make 32. And right now I'm risking 5 to make more than 64 at this point. I'm looking to make 4,000 on this latest trade that I've been in. In this example, this is a hand-picked theory example, but it's one that I actually did. We have a massive bullish uptrend in the 30-year bond. It breaks its trend line right here. It sells off, then it consolidates, and then it sells off again. The current price is 145. Are we in an uptrend or a downtrend at this point? Are we bullish or bearish in this example? For me, I was bearish because I'm like, look, it had a nice run. Now it's selling off like crazy. I only want to short things. I don't want to have anything to do with the jump up. I just want to short the bonds. So then what I do is I say, okay, I've got the bonds pegged as going lower, pegged as going lower, pegged as going lower. So I'm going to place all my bets on the short side. Like I said, it'll work intraday and overnight. At 6 p.m., the bond market opens up. it immediately goes higher, and if it goes much higher, it goes without me. It sells off, puts in a low, bounces up 8 ticks. I enter it right there. I place a stop 5 ticks higher than that, and then here's my 32 tick target. It's a pretty simple trade, right? Let's zoom in here. And here's how all the math works. We have bonds pegged as going lower. 6 p.m. it opens up, the market goes higher, sells off, puts in a low. The low is at 146 and 4/30 seconds. You see this right here? That is 146 and 4/30 seconds. What is 4 plus 8 if we think it's going to bounce? If we think it's going to bounce up 8 ticks, what is that? 4 plus 8 is what? 12. So I want to place a sell order, right? I want to place a sell order even before it gets there at 146 and 12/30 seconds. Now, what is 12 plus 5? Because now this is my risk. Because I'm going to do an OSO or an OCO order. So it's 17. 12 plus 5 is 17. My stop loss is going to be 146. I'm dyslexic. 146 and 17/30 seconds. That's our risk. 5 ticks. Now, what's our target? Our target from our entry here is going to be 32 ticks below, which is pretty easy to calculate. 145 and 12/30 seconds, which is right here. 145 and 12/30 seconds. Make sense? Any questions on it so far? Now, what I do is I wake up in the morning and I go, okay, I risked $156, which is up here somewhere. I wake up and I go, oh, we're in the profit. All right, cool. I'm going to ratchet down my trailing stop. I'm going to lock in at least $300 because I was risking 156. I want to at least make double what I was risking. And about 2 minutes later, boom, we make $1,000 on this trade setup. Super simple, right? Let's go through a live example, okay? So I'm going to discard this. And then this is one of the most recent ones that I've done. So, and I'll show you how to trade the bond market in the next example. So can everyone see my TradeStation setup? So here you can see that I risked originally $156 on this trade. I'm long bonds at 133 and 5/30 seconds. And then I have locked in my $1,000, right? Because I usually risk 156 to make 1,000. And then I said, you know what? If it takes out the low by 2 ticks, I'm just going to bump my stop up there. I'm going to lock in $1,031.25. And now, right now, today, earlier we were up $2,156, and right now I'm up $1,656. Now, here's where my target is because I'm always doing experiments. I'm going to make $4,000 on this trade on a risk of 156. Does everyone see that? Let's walk through how you can actually do this with me, okay? Now, you're going to have a different entry because you haven't been in it for a few days, but let's walk through this. Number one, let's figure out where the daily range on the bond market is. This is a daily chart, okay? We're above the cloud. Can everybody see the chart? Give me a CFR chart if you can see it. All right, CFR chart. We're above the cloud. We're above the purple. We're above the blue. We're above the yellow. So would you call that a valid uptrend on a daily chart? Will we all agree that we're indeed? Now, I know I have some resistance here at 134.30 and 137.636. Well, I know I got an issue, but it's still a valid uptrend. Let's take a look at the 60-minute. Is the 60-minute a valid uptrend? Yeah, and it's been working out really well. Anytime the 60 goes above the cloud, it's good for a 2 to 5 day bounce before it revisits the cloud, crosses below it, and goes back up. So you can see bounces, crosses back up. So I would say we're still in a valid uptrend. So here's how you're going to do the bond trade if you've never done the bond trade before in your life. Number one, you've got to look for the range. Now, right now, the bond market is closed because why? It's 5 o'clock. They close at 5 when they open up, back at 6 o'clock. So let's pretend that we're trading this thing intraday, okay? If we're trading this thing intraday, what you want to do is just look for an intraday swing. So does everyone see this little high water mark right here? And this is a trade that we did in the trading room today that we recommend a lot of people take. So does everyone see 134 and 19/30 seconds right here? So that's its most recent high. That's its most recent high this morning in the trading room. Here's how we told everybody to work the deal. All right. So 19 minus 8 is what? What would that be? What is that math? Anybody know? Yeah, 19 minus 8 is 11, right? So 11, look here. So here was your swing high, and here was your swing high. You let it retrace 8 ticks, and then where's your stop loss going to be? What's 11 minus 5? What's 11 minus 5? What is that? We're going to make this color green. Is it 6? So it's 6. We'll make this red. And then your target is that obviously going to be where? Then your target would be 1:35 and 11:30 seconds. Now, did you get it today? Nope. You only got to 10. Oh, that sucks, doesn't it? You didn't get your full 1,000. Now, you can cry all the way to the bank because you only made about $900 instead of 1,000. Right? Does everybody see it? Here's your swing high. There's your swing high at 1:34 and 19:30 seconds. You're waiting for an 8-tick pullback. You're going to risk 5 ticks to make 32. Right up here is where you're 11:30. It's because you entered at 1:34 and 11:30 seconds. You got real close. No cigar though, right? Now, depends. Are you going to jump out of it early? Maybe, maybe not. I don't know. It depends on your actual trading plan. Okay. Now, for me, what I like to do, would you still be holding it? I would still be holding it. Yes, I would. I would just ratchet up the stop to break even or better is what I would do. I would ratchet the stop up probably to 1:34 and 19:30 seconds and wait for it to go all the way. In this case, not making it all the way to 1,000, what signal would you use to get out, or would you wait to get stopped out? I would wait to get stopped out, but you can use a parabolic SAR to trail the stop, and it'll do a really good job of getting you out of it so that you maximize your profit. For me, I would hold for the stop and the target. Okay. Now, like I said, I like making my life easier. So what I do is I build indicators. I'm not here to sell you an indicator whatsoever. I'm just here to show you that this is what I would do. I would go insert analysis technique, and then I would input my indicator and just go retracement line. And then I'd go, okay, here's what I want on the inputs. I think we're in a valid uptrend. I want to do an 8, 16, or 32. I want to do 5-tick stop loss, 32. Okay, well, I'm good. And then all I would do is I just hold down the left control key and go click. See how I did that? That's pretty cool, right? So all I have to do is just hold down the control key and left click, and it goes, boom, here's your entry, here's your stop, there's your target. I have my team build stuff like that just because it makes my life easier, and I don't have to count on my fingers or anything. Now, there's another way that you can do this trade. You could just go like this, and you go, okay, what was the high in bonds today? There's another way that you can do it. You can say, hey, the high in bonds today was 135. You just go, okay, 1, 2, 3, 4, 5, 6, 7, 8. You could buy an 8-tick, but was the range on bonds today more than 16 ticks? Yes or no? It was, so you'd have to go down another 8 ticks. 1, 2, 3, 4, 5, 6, 7, 8. So right here at 1:34 and 16:30 seconds would actually make a decent long, right? So let's go right here, and I'm going to take this one off. So if we were going to use the high of today, and I'm going to go control, left click, then here's an 8-tick, here's a 16-tick. Do you guys see that? So I wouldn't take the high of the day and do an 8-tick. I'd take the high of the day and do a 16-tick entry right here. Still wouldn't be stopped out. I'd be slightly down on the trade, but not taking too much heat. Does that make sense for this trade setup? It's not a hard trade setup to do. Now, when it opens up at 6 o'clock, you got a new range, and you're going to be looking for a new high and a new low. And that's how that trade setup works out. It can be used both intraday and overnight. It's called an 8, 12, or 16 ticker trade. It works on both the long and the short side. I've showed you both examples. It is not a hard trade to do. Bonds are boring. That'll put you to sleep. It's really, this trade is really designed, in my opinion. It's great for people that want to make anywhere from $8,000 to $12,000 a month and just trade, you know, a 1 or a 2 lot. And you can do it with a 1 lot. Now, some months are going to be a lot better than that. Some months are going to be a lot worse than that. But I've kind of designed the trade so that you can not have to trade like crazy all day long in front of the screen. And it's designed to try to pull out $8,000 to $12,000 a month out of the market. So that is the bond trade. Now, I have run out of time. I did have another trade set up that I was going to share with you, but I ran out of time. So hopefully you learned something. Let me share my PowerPoint with you really quickly here. I don't have time to go through the sneak attack, but you got to have good profits, and you got to have confidence. With good profits, your confidence will increase. You got to have good money management, and good entries and good exits. And with that, your profits will increase, and so will your profits. You got to have good setups. A good setup that goes executed will beat the pants off of a perfect setup that goes unexecuted. Good is good enough. Don't try to be perfect. Perfect is the roadblock to progress. All right, it is just the evil nemesis of perfection. There's no such thing as perfection. It's just progress. Don't try to filter out all the losers or the stop outs. That is a fool's game and for suckers only. Enjoy the process. Work through some of the wins and some of the losses. All right. Now, I have a course that I teach called My Favorite Trade Setup. One of the most frequently asked questions that I get from people is like, hey, that's a cool trade setup. Do you have any others like that? Now, like I said, I trade anything and everything. The course is called My Favorite Trade Setups right now. It usually retails for $197. I'm going to give you the opportunity to invest in it today for a 50% discount, and your special offer would be $97. It's only good for the first 50 people on this webinar. The deadline is for the first 50 people. You can go to hubertcenters.com/buzz. I will try to grab this URL and put it in the chat box so you can see it real quick. There you go. And there you go. You can just click on it. You can also call my office. I have teams standing by. They will get a lot of calls, and they'll be inundated with calls. So you'll probably have to leave a voicemail message. It happens every time. So that is the deal. It is My Favorite Trade Setup right now, 50% discount for $97. Let me show you what you get in the course, okay? So what you get in the course is substantial. It's not just a intro course. Number one, it's my promise to you, you will be 100% satisfied or we will not keep your money. 100% satisfied, okay? So if you don't love it, we won't keep your money, all right? So I always over-deliver, and you get a lot of value out of the course. HubertCenters.com/BUZZ. There's the link in the chat. When you click Add to Cart, here's what's going to happen. You're going to look at something like this right here. You'll see a picture of my big catfish head there. And then the next screen that you go to, it goes watch Part 1, watch Part 2, Part 3, Part 4, Part 5, Part 6, Part 7. All 7 segments are about an hour to an hour and a half long, okay? And all 7 hours are theory. And then after the theory, I did 2 days of live trading that I recorded in Part 1 and Part 2 that you can view, all right? So you get the theory and 2 days of live trading that I recorded showing you, all right, here's what I taught you. Now here's me putting it into action. They're all super simple, easy trade setups to do, just like I just taught you. Here's what you get in the package. You get, as soon as the PowerPoint will advance, why is that not working? Oh, it's because I'm not clicking it right. Module 1, how to stock trades, swing trades for stocks and day trades for stocks. Favorite way to scan the markets for swing trades. The best way to scan the market for day trades. And how to filter out the best trades to take. That's in Module 1. In Module 2, you get the 7 horseman trades, where there's 7 stocks that beat earnings 90% of the time. And then there's 7 stocks that beat earnings 80% of the time. That alone is worth $97. I'm going to teach you how to trade stock gap plays, and I'm also going to share with you how to trade the gap and go and the gap and crap strategy on stocks. In Module 3, you will learn how to trade the E-mini day trades. Now, I trade a lot of E-minis. They're not easy to trade, but you can do it. How to trade gaps on index futures, which is what we did earlier. The ambush trade, the 85-115 fade trade, and then the crescendo trade setup. All right, the crescendo trade setup. And then Module 4, we do some more E-mini day trades. The famous Goodnight Gold trade, where I share with you how to risk $600 to potentially make $6,000. It's a really good trade. The gold rush trade and the gold bug trade. And then in Module 5, we go through bond, swing trades, and day trades. Now, I already taught you one trade today, which is the overnight bond trade. The overnight bond trade. It also works intraday, and it also works in not only the 30-year, but it works in the 10-year, the 5-year also. But they're different rules because they trade differently. And then there's the sneak attack trade. So that's all 5 modules that you get with the course. HubertCenters.com/buzz. You get a 50% discount for the first 50 people. The telephone number is area code 859-963-3445. I will answer any questions that you guys have. Go ahead and hit me in the chat, and I'll do my best to answer your questions. will this package go over the bond trade you just went over? Yes. I teach 2 bond trades in the package, and I just taught you one of them. So, yeah, it'll go back through it again. What about the indicator? Indicator is not included. If you wanted to add the indicator, you could, Lee. I think we sell it for $97. The indicator is extra. You don't need to have it, though. I mean, the way I teach you to do it, you can just count, right? It's not required. It's nice to have. It's not required at all. Do you recommend TradeStation to trade your system? It doesn't matter. I don't care what platform you use. I show you things that you can use. You can do it on anybody's platform. TradeStation is not required at all. Thank you, Hubert. With your TradeStation's bond radar screen, where do you get the futures info data? John, if you need that, just email us, support@hubertcenters.com. I think we've uploaded it into the members area, but if you take the course, I'll give you that layout for free. It's not a big deal. I'll share that with you. No problem at all. I hear the phone ringing, so I appreciate that. Thank you, guys and gals. Any questions on the trade setup? Are you going to be emailing us a copy of this PPT? I won't, but I know that Fausto's team is recording this, so you guys will have a copy of the recording. So, yes. Thank you very much. USM14 is the current contract month that you want to be trading. That is correct. You got it. Did you say this was on DVD or online? It is online. It's an online course. As soon as you hit add to cart, you will immediately be able to watch the videos in real time that were recorded. Yes. Is it included the bond? Yeah, the bond trade is included in the course. So in the course, let me back up here. Let me click that thing here. In the course, you can see that the bond trade, the overnight intraday bond, the overnight bond trade, it's included. There's another. So what it is I've taken some of my favorite trades in some of the markets that I trade, and I would pick 1 or 2 different favorite trades out of that market and say, okay, here's how I trade bonds. Here's how I trade gold. Here's how I trade minutes. Here's how I trade stocks. How could one find a mentor? You just got to ask. Most people either charge you or make you work for them for free. You just have to ask around and see if somebody's willing to do it. Sorry I had to step away. Is this recorded for later listening, and will the special apply? The special is only good for the first 50 folks. I know that Fausto and his team will be sending a recording out, though, but it's usually only for the first 50 people. It's for fast action takers. How long can you watch the lessons online? Stanley, until I die and no longer pay the hosting bill. Now, I know I will eventually die. I don't plan on doing it tomorrow, though, right? So as long as I'm in business, and the business has my name on it, so I don't plan on shutting down the business anytime soon. As long as I'm alive, you can watch the video. Do you offer any other services? I do, but what I try to do is the best way for you to get acquainted with my services. I call this offer a welcome mat. It shows you kind of what I'm about and how I trade. And if you like my style, you could buy some of the other courses or indicators or educational materials. But this is the best way to start because it's a really good bang for your buck. It's good information. I do know that I'm doing a bond trading boot camp later this month. I only do it once a year. It's a little higher price though. It's $497, but it takes you from a novice to a seasoned bond trading tactician. But I think that's later this month. It's either April the 23rd and 24th, but it's like $497. I would start here first to see if you like me and if I like you, and if you want to move on to something you could. Again, sorry I had to step away. What does the special include, and is there a trading room? We do have a trading room. It's $97 a month. The offer does not include a trading room, but I think there's an opportunity for you to do a trial to it once you buy. Just called your number, could not get through, went to voicemail. So yeah, Steve, thanks for the call. I've got 2 operators behind me. I can hear them in the background taking calls. They're just inundating with calls. So if you leave your message, they'll call you back just as soon as they get off with it. Right. Signing up now. Thank you, RS. Can you please display the chapter modules again? I sure can. So the chapter modules are, let's start them in order here. Are you wanting this right here, like that, or are you just wanting module 1 through 7? So module 1 is favorite ways to scan the market and swing trade, best way to scan the markets and day trade, how to filter out the best trades to take. Module 2 is the 7 horsemen, 7 stocks that beat earnings 90% of the time, 7 stocks that beat earnings 80% of the time. stock gap plays, gap and goes, gap and craps. Module 3 is, I'm clicking, how to trade gap index futures, the ambush trade, the fade trade, and the crescendo trade setup. The famous goodnight gold trade, the gold rush trade, the gold bug trade, and then you also got the overnight bond trade and the sneak attack trade. Here's one trade that you'll be learning in the course. On market internals, anytime that the trend gets above 1.5, when did this thing first get here today? It started at what time? About 1 o'clock, right? 1 o'clock, and then it dipped down. So, and the height of the trend was 103. So from 1 to 103, there was a buy signal in the market. Okay, so let's mark this. From 1 to 103. So let's go from 1 to 103. There was a buy signal in, that's 105. That'll do good enough. There was a buy signal in the index futures. I don't know about you, but that signal is a pretty good signal to get along the Dow, S&P, NASDAQ, and Russell, right? So that's one of the strategies that you'll learn in the My Favorite Trades, all right? Let's see here. Hi, Steve. I just called you. All right, good to go. And then for the day, this is what My Favorite Trades was able to do for me today. $500 on the E-minis, and then on the bonds, I'm up 16.56. These are not typical results. You may not experience any profits whatsoever. I'm just showing you what I'm doing. So that's it for me. Fausto, thanks for having me, man. I appreciate it. Good luck. Hope it helps. And I'll see you guys on the next webinar.